last few years, it all got very instinctive and impulsive because, the founder would come and say, look, this is the valuation and you have 24 hours to close the deal. Otherwise, I go somewhere else. Now, if you're in the game, sure, you can decide to sit out, but it's really, really hard to sit out completely, right? Because if it's real, in our business, the cost of omission is much, much higher than the cost of commission, if you understand what I'm saying. अगर आप सिर्फ ना बोलते रहे, and many of those companies become very large and unicorns, that is very painful because every day you'll read in the media about, the next check that they've raised. But when it comes to, not investing, it's okay. I mean, investing and failing, it's okay, right? You can factor that in your returns. I think आजकल जो धंधा वर्ड हमारे हिंदी में इंडिया में होता है वो ज़्यादा सुनने को मिलता है कि भाई धंधा बताओ, धंधा कहाँ है, राइट? सो वो शब्द हमारे शब्दकोश से शायद गायब हो गया था. धंधे की बात कोई होती नहीं थी, सिर्फ ये बात होती थी आपका अगला राउंड कब होगा, when are you going to raise at 100 million, when are you going to do a 20 million round. So I'm very happy to actually see that the conversation has now shifted back to fundamentals, right? The conversations we are having these days is whose profit pool are you chasing? What will their reaction be to you attacking their profit pool? What will your gross margin be? When you jump into this market and 10 other people come in, what will the economics look like? Right? Not just about when are you going to raise the next round and how are you going to raise the next round. So I think that's very welcome. I personally thrive in environments like that. I enjoy environments like that. I think gut and instinct will always play a role. And the reason is because gut and instinct is not some carnal feeling that you have, right? It is an informed sort of sense over years of what you've been doing, right? And that's why as you keep doing something with experience, your instinct gets better. And with confidence, your instinct gets sharper. The world is littered with examples of great products that are lying in a graveyard in Silicon Valley or in Bangalore, right? Great products don't necessarily build great businesses. And I've been guilty of that. Because I started my career as a product manager in the US, I've been heavily biased towards product managers. तो मैं बहुत excited हो जाता था जब कोई product manager मिलता था showing me nice templates of products and this is how it'll work. But I've made my mistakes, and the best product doesn't necessarily win, and a great product doesn't necessarily make for a great business. So I think commercial acumen is extremely important. Understanding margins, understanding competitive strategy and things like that. If you had to ask me one attribute that separates success from failure in entrepreneurship and building companies, I would say that's perseverance, right? If you spend 10, 15 years of your life going at something in a large enough space, in a large enough industry, you will build value even if you are somebody who tends to self-immolate or self-destruct, right? Because that's just what happens. Efforts compound just like money compounds, right? So if you stay at an industry, stay at a space, stay at a problem that is large enough, caveat being large enough, for enough time, you will compound value. I mean, they should invest, but I'm not really sure that they should be setting up funds while they're still running a company or spending an inordinate amount of time doing it. And although my experience and my lesson says otherwise, I would still say that, and I'll explain why, right? I started at a very different time when there wasn't enough capital available for a lot of founders, and there wasn't enough competition in what I did, and the markets in what I did were very small. The opportunities weren't that large. So I had the luxury and the luck to be able to use time to my benefit. And if I wanted to do bigger things, I had no choice but to invest in other people or invest in multiple opportunities, because the internet market itself is very small. So over time, I kind of learned the ropes. Today, if you are an entrepreneur having raised VC money, you're probably chasing $1 billion dream, or at least your investors are pushing you, or nobody's going to give you money unless they think that you're going to build $1 billion enterprise, because that's the only way they make their money back. So when you're doing that, and with the level of competitive intensity there is today, it's really, really very hard to take meaningful time out to make meaningful angel investments. All I'm saying is they shouldn't devote a meaningful amount of their time, if they've raised a lot of venture capital money, to go out and start evaluating startups. There are other ways to invest, which is friends, companies they know, funds, early stage funds, which I'm a big investor in, I believer in. I invest in a lot of early stage funds. Platforms like LetsVenture, where somebody's leading, doing the diligence. You don't have to do the heavy lifting. So I'm all for that.